All right, guys. I just wanted to revisit one of the trading ideas I had a few days ago and kind of show you my position and how I'm managing it. And right now, I have a position, a long position from 39,000 roughly. We can go to the paper trading account. You can see Coinbase USD, long 69 lots, beautiful number at 39,167. Now, the kind of the idea of this, again, if you haven't seen the previous video, is based off the idea that this is a monthly uptrend. We have a higher low set in, and then the highs begin to get taken out, and then price comes down, sells off the open, comes down to this low, but defends the low. I'm trading this with the anticipation that that low is defended. So that would be a very clear invalidation point. If that gets taken out, something else is happening. That's why I have a stop right there. So if we go on to a weekly, we can kind of see it, a little bit better. Basically you get this higher high on the weekly, price comes down, sort of towards that area where it released. You could probably refer to this as a daily point of release. You have I'll mark off the important dates and time on this. So essentially you have your quarterly open there, and your FOMC open right here. FOMC data hit the market on this daily candle right here, and you have your higher lows, lower highs, tightening range, data point hits. You get your expansion of volatility, runs up, sets in higher highs. Then you get your quarterly open, and then you get your full retrace to that the FOMC area of liquidity where the data hit the market. You get your full retrace, get a little bit of reaction there, and then now you get what appears to be a little bit of a stop run below this low here, right? Because if you go down to a 4-hour, you can see, price comes down to that level very violently and very aggressively right here, and then closes back in the range. And this is very important. This is something I want to point out in this video. It's actually had a stop here, managing a good deal of risk on my position. And so I got stopped out at 39,200, actually, these lows here. But then when I saw, price go down below and then close up in this range, that gave me an opportunity to re-enter the position at the same area I got stopped out. So I actually re-entered the position here based off this retrace into this level here. So you get a little bit of retrace here. So I ended up, putting the position back on in the same area I got stopped out. It's a good example of, how that's the most ideal situation, right? You want to be using stop losses, and you can re-enter, the stop can take you out, and then the market can give you an opportunity to re-enter. And that's exactly what I did here. And, it's starting to work in my favor. So it's giving me a little bit of a trade that I can start to manage. I probably won't do that on this video, but, again, then I would just generally look upward to areas of, interest to start taking profit and start managing risk. Really, the area of interest is right here. This area right here, this low here. If we go to a daily time frame, you can see that that's essentially the level that things started breaking down. And the important point here is that the level where price starts breaking down, that's actually going to have a little bit of staying power in the sense that when price returns to that level, it's going to offer a reaction likely. Again, it might not be a reversal point, but it's at least going to offer something of a reaction. And if maybe it's not exactly at this level, maybe it's a little bit higher, but this is a general region that you're looking at. And again, we have this quarterly open framed off here, and then the monthly low is framed off down here. We can go down to the monthly chart again and kind of see, again, it's not perfectly clear, but you have your monthly low here. Then we'll go down to a daily, you have your quarterly open. So you can see on this how price is sort of drifting down into this area of opportunity. And this is the area where I was looking to take a long position, particularly because it's a full retrace of this swing. And again, I would be looking to take a good deal of risk off at this level. Again, there's especially if you go down to the lower time frames, there's much more areas to manage the position. Like if you go to a 15-minute time frame, there's a lot more that you could do with this. But just for the sake of simplicity and honoring the fact that this is a macro trade, I just want to be make this as simple as possible, and that the primary areas I'm looking at and where I'm looking to manage this position. So this will be another entry to the Trading Journal series. Again, if you like this type of content, just make sure to like the video, subscribe to the channel, and catch you guys in the next one.